Everyone. I want to share a very important message. I carry the most important responsibility of stopping you guys talking at 5:30 so that we can start drinking. Unless someone else disagree here. Um, Perfect. So let's start. Okay. Russell, can I start with you? Trading, global liquidity. Can you tell me a bit of what you do and how is it like the interoperability, which is one of the main topic here, is relevant to you and your clients?
Sure, sure. So to introduce myself, Russ Tupai, run capital markets business sales for Colt. If you're not familiar with the name, it stands for City of London Telecom. We've been around for 30 plus years. We have 6,000 employees globally. We've recently gone through an acquisition with Lumen in Europe for $1.8 billion. So we're expanding our footprint. We're very strong in Europe, but with the Lumen purchase, it will allow us to reach into Africa and the Middle East. So in terms of our capital markets portfolio, which interconnects from an ecosystem perspective, we offer co-location, hosting of servers in exchanges. We also offer market data. We have 80 plus exchanges globally that providing access for hedge funds, banks, high-frequency trading firms. So we're very much at the connectivity and ecosystem space. And what we've seen is obviously the rise of the crypto exchanges. And what we find fascinating there is that these are cloud-native exchanges, whereas traditional exchanges have been very much on-premise solutions, and we very much feel that they still will be because of the amount of investment that firms have put into that from HFTs and the exchanges and ourselves. However, we see the need for bridging the gap between the TradFi world and the cloud-native world, and we launched a solution last year providing multicast market data into AWS. We work with all cloud providers. However, AWS has sort of the most experience with financial firms, and their market share is, I think, around about 34%. And that's given us the ability to pick up some new business. There's a new crypto exchange in Singapore by the name of AsianX, which is backed by SBI and Six Group. And that really allows them having their Aquis matching engine in the cloud and then connecting it back to the colo and giving them access to institutional clients. And interestingly enough, today we had another meeting where they had the Aquis matching engine in the colo and they were looking to get back to the cloud to connect clients. So that's sort of where we are in this space, and I'll let the other guys jump in terms of the digital assets.
Interesting. In fact, interesting the crypto world is going to your world as well. So Nikki, looks like your firm is doing interoperability quite well because CCIP. Can you tell us, again, why is it relevant to your customer? Again, I mean, they serve a lot of blockchain clients or token clients or crypto clients, whatever you call it.
Yeah, thanks, Eddie. Hi, everybody. Pleasure to be here. So those of you who don't know, Chainlink, we're a platform that offers a range of Web3 services. So some of that is focused on bringing off-chain data on-chain. Some of that is focused on connecting off-chain systems to on-chain systems. And the final part, exactly as Eddie alluded to, is how you connect different blockchains that enable free flow of value. So we started our lives actually in the DeFi world. So at any given point in time, between 60 and 80% of DeFi right now, any asset in DeFi is typically priced via a Chainlink price feed. So these are being brought on-chain via the Chainlink network in a highly decentralized, secure, and reliable way. But we really wanted to solve another problem, which was exactly as Eddie said, how can we enable the free flow of value, the flow of tokens and messaging between different blockchains, importantly, securely and reliably. So at last count, there was $2.8 billion in bridge hacks, entities that have tried to make this work. And what we believe is this is one of the key structural challenges in growing both the blockchain sector, Web3, but importantly driving that convergence between decentralized finance and traditional finance, which I think has been mentioned quite a few times throughout today. So for us, the cross-chain interoperability protocol is really about enabling that free flow of value, and importantly, it all begins with security. So when you speak to our CEO, Sergey Nazarov, he describes Chainlink as a security company. And so it's really a combination of three things by which we're enabling this free flow of value. One is via our integration with different blockchains. We invested 4 years building integrations with 15 different blockchains, both public and private. So our off-chain network can read and write to those particular blockchains. It's very important. We run a group of decentralized set of nodes, or validators, if you will, which is an important part about how that network is secured as well. And finally, going back to the security properties, we have a wide range of different networks that run and operate this cross-chain interoperability protocol. And importantly, as it relates to traditional finance, it's not just about committing transactions or executing transactions, but it's also about monitoring transactions. So similar to the way a payment network operates, we actually have validators that are searching for nefarious activity. And just to give you an example about how our design and engineering team thinks about these problems very deeply is if you have to choose between pausing transactions and enabling transactions in a security setting, we actually prioritize security over liveness. And this is, again, something that's really resonating very deeply with traditional finance organizations.
How does it work for you in terms of interoperability?
Yeah, so interoperability has a kind of, we talk about it, and we mention the name, we don't probably describe all the different parts of what we mean by it. So to us, it's really many things that Nikki talked about, but it's really interoperability of data, interoperability of processes, and one of the things that we really focus on is, actually I'm going to give you two models just to kind of line this up. And I know that I'm blocking people from drinks, but I'll be quick.
I'm timing it, don't worry.
Yeah. So many of you probably know this, but it's banks and financial institutions use something called a business capability model, and that model has around about 574 functions, give or take. Whether you use the Oliver Wyman model or you use the Deloitte model, it's about that. And so what we've done is we've kind of distilled those functions and try to understand how many of those functions are eliminated or reduced through the application of blockchain, and how to interconnect those functions because it's the same data or it's the same process, because that's what we're really doing. I think one of the earlier panels talked about the spaghetti that is all these different systems connecting. And the real problem we're trying to solve when we're talking about interoperability is that we have the same data, but we're also processing the state, i.e. the change in data in the same way once information is received. And so having that kind of mental model as to how blockchain or processes are changed within our institutions is the first part of it. And so what the process happens at Onera, how we think about it, is financial institutions that are regulated, we shouldn't get in the middle of that. We should enable them to perform that function of the movement of data and the consistency of state change, right? And I'll give you an example in a second. Your name here? Richard. So Richard looks like a very trustworthy person. I give him, you know him, he's not trustworthy. Damn it. So I loan Richard on January 1, $1,000. 10% coupon, semi-annual terms. We sign up and we've exchanged data. Yeah, everyone understands what that is. So on June 30th, which is 180 days later, so that's semi-annual, he owes me a coupon payment, right? And I'm not going to test anyone here what that is, but his back office wires me $49. Roughly makes sense because it was $1,000 semi-annual. It's $100 at the end of it, so you can do the math. My back office was expecting $51. Why, if we had a live trade on day one, do we have a discrepancy on day 180 in terms of how much we're going to change? That error was there from day one, by the way. What actually happened was his back office had a different interpretation of the state change and had assumed, because of my wonderful British accent, that I must have been calculating interest on a European basis, which is 30 over 360. But actually, I live in America, and I'm actually all about actual, and there's actually 5 extra days of interest there that your system hadn't accounted for. We go back to the docs, and we realize the docs said that, actual over actual, and we rectify it. But it took us a month to figure it out, and it cost us all this money in back office. We talk about all this stuff all the time, but we don't actually get down to what it is we're doing. So what we do at Anera is we actually set ourselves up such that that information is interchanged, and at each stage of the transaction, orchestration happens. So think of the message goes, we orchestrate each stage, so we agree, and we never end up in that problem 180 days later when we have a disagreement, because that $1,000 and that 49 sounded insignificant, but if I made his trade $100 million and we've got a difference, that could be bankruptcy. Or if I had a portfolio of 1 million transactions and I've got a default rate of 3%, that's also costly. And so when we talk about costs all throughout this day, those are the types of things we're talking about, and that's the problems that we solve in interoperability.
That's excellent. And please don't give him money still. Despite you can solve it.
It looks very trustworthy.
Yeah. Well, yeah. Andrew, to you, HSBC. I mean, again, I'm a customer of HSBC since 16 years old. It was last year.
Thank you.
So I deposited $100. I remember when I was young. I never thought HSBC would have this interoperable HSBC tokens or deposit. But something came out today, actually, from HKMA. You guys saw Michael this morning, Michael Law. Then he went back to the office, boom, pressed the send button and make an announcement that Hong Kong support tokenization. So basically, the banks, guess who they mentioned? Hang Seng Bank and HSBC. So they were on the stage as well. I feel like I'm the only left alone. They were all busy doing press release this afternoon. I'm here. But with that, there's something called wholesale CBDC that just got announced. You guys are involved, and I know Orion is that a system that you guys also handle. Can you share what you guys do?
Sure, thank you. So thank you for being a HSBC customer. I am also a HSBC customer as well. I've been banking with HSBC for many years. So I think this is the bank that everybody in Hong Kong will know about it. So in HSBC Orion, I think everybody knows that this is the strategic. It actually is an HSBC strategic tokenized digital asset platform for the bond issuance and the secondary trading for the bond, digital bond. In HSBC Orion, basically we help Hong Kong MA recently to issue a 6 billion equivalent Hong Kong dollar bond. It's a digital native bond for the Hong Kong government. So what I meant by digital native, that means that the bond, right, initially, normally it will issue in the CMU, which is the central money market unit in Hong Kong. But the digital native, we don't need to do that anymore. So we basically issue the bond in HSBC Orion, right? So this is the first digital native bond in Hong Kong. And then we also do we also is the world first, we call it multi-currency digital green bond. Basically, we are issuing 4 tranches. So it's Hong Kong dollar, US dollar, euro, and CNH as well.
Looks like people are drinking. Yeah,
So
but anyway, we go on.
He's not going to the
we go on.
bathroom.
Yeah, so I'll talk about digital native. So is what uniqueness for this HSBC Orion is actually the CMU is operating the HSBC Orion this time for Hong Kong. With that, then we can leverage the CMU international linkage so that it opens up the global market for the investor for this green bond, so that the Euroclear and also the Clearstream for other the security depository, so the member of them can actually subscribe to the bond as well. Speaking of the HSBC Orion, we basically digitize the whole workflow, right? So it's not no longer a POC anymore, so it's a productions live system. So if anybody knows, it's basically you can put in the instructions through the Swift messages. Everybody knows the 541, 543, and then basically Orion, we match the instructions, and then we basically sending the confirm back, and then the DVP happen at the back, right? So what I meant by DVP is basically the issuance token, right? So we basically we have two tokens actually exchanging across. Is the settlement token and also the bond token we exchange. It's happen automatically. We call it atomic swap, right? So this is the HSBC Orion basically covering all that. We also following the ICMA, which is called the taxonomy, the bond taxonomy. So basically we're supporting the cross interoperability here. So I echo the interoperability, right? So basically we need to work across different chains. So I have an engineering background, so I understand the technology behind. We lock the tokens. There's many different technology that we can use it. SDLC being one, right? So I think looking ahead, though, there should be a lot more use cases doing the interoperability here. But there is many aspects that we need to look into. For example, the compliance, the legal, so those regulatory stuff that we also need to look into as well.
Thank you. We have 10 minutes left. There's no time for Q&A. So I'll dominate the question. Otherwise, they will leave for drinking anyway, why they won't stay. So Nikki, Russell, let's make it open. So second topic, proof of reserve. Can you go first?
Sure.
Yep.
Explain it?
Yeah.
So I think one of the problems we also solve is trying to figure out, well, if you're collateralizing some form of, whether it's a fund or a token, typically in the stablecoin world, but also extending out to kind of other precious metals and so on. One of the key problems, particularly in, again, decentralized finance and crypto, has been if you say you are launching a stablecoin that is matching one-to-one with dollars that are stored elsewhere in a bank account somewhere, is that money actually there? That's the first part. Are you verifiably bringing that data on-chain and ensuring that the public or your users can actually be confident that in fact that money is actually there? And there's various challenges that have appeared in the sector over the last few years in this realm as well. That's part one, is so can you actually verifiably prove that the funds are locked away in a bank account somewhere? Part two, and where it gets really interesting, is can you actually incorporate rules into the minting of a particular stablecoin? So using proof of reserve, to Eddie's point, what we enable our users to do, both again in the decentralized finance space as well as in the traditional finance space, is if you incorporate proof of reserve to bring that data on chain and make sure that users can be what you hold is verifiable. But importantly, incorporate into the minting contract, your users now actually have assurance that you as an entity cannot over-mint. So if you say you have $100 million in a bank account, you should have $100 million worth of tokens. You can't mint $101 million of tokens. And I think that's really the power of it. Verifiable data, bringing that transparently on chain, and then putting controls around how that can be used.
Yeah. Important, especially if you want to create a regulated fund token or stablecoins, your regulator wants you to show transparency. I mean, and the requirement now is like they're not sure if they want you to show real time. There are folks who show quarterly, folks show monthly, some are bi-weekly, and I think being prudent, you want to show real time. So that's important. On this topic, anyone want to chip in? Feel free.
Proof of reserve is like very much in the kind of crypto realm, right? And I kind of straddle both, kind of like you, I guess. I'm on a board of a public crypto mining company, all right? So very much aware of and focused on proof of reserves and what it means. But with respect to Onera, how we think about it, I mean, the equivalence. It's not really equivalent. There's a matrix that I have in my mind, which is on one scale you've got let's call it permissioned versus private blockchains. On the other scale you've got registered assets versus bearer assets, and kind of most of us in this room I think are focused on the bottom left corner, which is permissioned blockchains with registered assets, and so proof of reserves is less needed. When you're in the top right corner, which is permissionless assets and bearer assets, now you're in a realm of crypto and virtual currencies, much more important to focus on that. And I think many of us are thinking about how to get there, but not there yet. Where I do see the application of it, though, is when one of the things, and most of us do this in our daily lives, is there is a bifurcation of the rail. The asset rail, in most cases, is very separate from the cash rail. And so when we think about one of the big problems, for instance, in crypto, which is, in fact, the big differentiator in crypto is a a real-time gross settlement kind of business. You either have the money or you don't. And in traditional markets, there's a credit market, right? So I can be in and out of IBM or in and out of Amazon stock all day long, and then only have to post, 2 days afterwards. And as a result, what that means is when you're trying to, you can have a support something called best price execution. Anyone in FX, anyone in equities knows exactly what that means. Doesn't exist in crypto. It's really best liquidity. It's wherever you've got liquidity parked. If you happen to have liquidity parked in an exchange that hasn't got the best price, or tough luck, because you can't settle. And so we've got systems that are set up to help us to kind of step one back from that, and that's what we do at Onera as well. Make sure that atomics. I don't want to call it atomic because true atomic means you're on the same chain, but just for the sake of argument, it's really an atomic settlement happening DVP or even DVD if you're so inclined, and that's what we enable as well.
Great. In fact, if you can have proof of reserve, you actually can enable credit lending or margin trading environment much better in the crypto space. Yeah. Actually, for both gentlemen, since on this topic we're on interoperability, proof of reserve, and real-time valuation, so it's quite trading oriented to a certain sense. You want to trade, you want to have liquidity, you want to make sure that you're facing the right guy, not rich, so that you get your money back. Anything that you want to share with us from your experience? It doesn't have to be just crypto or blockchain. It can be anything.
Yeah, so maybe I can share a little bit here. So I think if I look into HSBC Orion, right? So when we talk about the DVP, so we talk about a cash leg and then we talk about the asset, right? So it's an asset network and then there is a payment network, right, per se. Then from HSBC, maybe that's easier, right? So because we can basically handle both network, right? Because we can handle the payment network, we can also handle the asset network all in once. Then if we speak about outside of this use case, right, then it will be two different asset network. It could be an asset network, right, within one organization, and it could be the payment network sit outside, right? So then we will need some sort of technology to bridge them together. So that's why we have the interoperability layer. I mean, I've seen some technology before. We go through those journey, right? So it's sometimes we talk about the permission blockchain, and then we go into a hybrid, right? So there's a block break. So there's no right or wrong answer, right? But I think it really depends on the use case. For HSBC Orion, so we basically handle both network, right? So then we also look into a use case, how we can broaden, right, the use case where we can basically interoperate with different parties as well. So we never stop looking into different use case. Yeah. So hopefully, we can see there's a lot of tractions on this in the market at the moment. Yeah.
Russell?
I think real-time pricing has been available, especially in the futures market for a long time. Cross-margining has been available, SGX, CME. But maybe another angle is the resilience requirements from a settlement perspective. And, there was a case last year with a major vendor that was hacked and led to, considerable issues, the single point of failure with a large number of, banks and brokers that were trying to work out their positions. So, maybe just stressing the resilience requirement and obviously different connection points and different ways of connecting is where we can help.
In fact, that's a great point. I come across Twitter from Twitter. Actually, you sent me one, saying that some other vendor who provide prices, they drop the prices all the time. They fail to publish on chain. It seems like a pretty common problem. I mean, not so much in our kind of like high frequency trading world with SGX or Hong Kong Exchange. In fact, we're a member of Stock Exchange. If we drop off if we don't show up, there's a penalty. So we try not to do that. At least we have ways not to ensure that we don't do that. But it looks like on chain is quite common. I mean, sorry, Emilio or maybe Nicky, you can chip into it.
I was going to actually come off this topic, which is something I mentioned right at the beginning, which is when you talk about interoperability and real-time valuation, right? So I talk about data. And so when we talk about public securities and you've got an ISIN or a QSIP or some other code, we kind of know what we're talking about, the asset, right? And it's easy for us to say, that's what we're talking about and that's the price of it. And these feeds come really important. But when you're talking about assets that don't have that common code, we want to make sure that I'm selling you what you think you're buying, right? And we're talking about the same thing. And we have to make sure we have the right models in place so I can actually do the real-time valuation. No point having a price feed when I'm modeling commercial real estate, and actually what it is residential real estate or private equity or some other model. So when we talk about real-time valuation, one of the things we have to have is the right modeling in place, and that's what FinP2P does, right? It's really having the model for the asset that you're actually looking at and making sure that then you can price it accordingly, and that's the only way you can scale risk when you're a bank. And that was my only point for those in the room that are bankers.
Yeah, I mean, it's a great perspective as well. I think from our, just kind of pulling together a few threads, and I think there were a few conversations earlier today about kind of the evolution of tokenization. And I think one of the aspects that we all tend to err on the side of is, well, we want to move faster, we want to move quicker. At least those of us, let's say, on the technology side, maybe not on the institutional or regulatory side. And I think one of the ways in which we look at both launching new services, new offerings, and working particularly with traditional finance and regulators in particular, is spending the time and effort in making sure that reliability and security come back and are maintained at all times. And it sounds like a simple thing, but to the example that Eddie gave, as soon as a data feed drops, and there are users of large and small sizes who are depending on that particular feed, and it leads to let's say a cascade, for example, that has a significant both negative impact, but also reputational risk for you as an organization. And I think this goes into a little bit of the culture of building that we're approaching as all of the people who are involved in tokenization and digital assets is really need to hold ourselves to a super high standard. And there is always that erring of, okay, let's move quicker because particularly now markets are exploding in a positive sense and so on. But that's, I think, a lot of it comes back to, I think, the culture of building and making sure that things are secure, reliable, and fundamentally what we're building is something that will last over time.
Thank you. In fact, we are on time.